Madeline, do we have?
Councillor King may give her apologies.
Yeah, okay, that's fine. Thank you very much. Do we have any declarations of interest? No. Okay. Do we have any public questions?
Sorry, Chair,
I have a declaration of interest.
Right.
It mentions the Berkshire Pension Fund. I've got about 2 years in that fund from about 20 years ago. So
okay, thank you. That is noted. Madeline, you sorry.
Sorry, Bill. Yeah, I was trying to use the hands up signal. I'm not sure whether whether there's still issues with that.
Yes.
I'd like to declare a personal interest in items 47 and 48, owing to the fact I'm a non-executive director of Woking Housing Limited and Berrybrook Homes Limited.
Okay, thank you very much on that. Okay, no others. We'll go on to public question time. Do we have any public questions?
No public questions, Chair.
Okay, and then on to, I think it's members' questions. And I believe we have one member's question, as far as I know, yes?
Councillor Camp doesn't seem to be present in the meeting.
Right. Do you want me, I mean, I have a copy of his question. I don't know whether members of the committee have received a copy of this question or not.
It has been circulated to all members, yes.
Yes, we have.
Right. Okay. Circumstances, I do have a reply. I spoke to Gregor Murray and I have a reply from Gregor. I can either read it, which is quite long, or we can give it as a written reply to Gary. What would you think we should do?
Usually they would get a written reply if they're not present.
Yeah. Okay, I will arrange that then. Thank you very much. Okay, we go on to the reply will be circulated, yes. Okay. Right. There's no other member questions, is there? Sorry.
No, Chair.
No, okay. On to item 47, the Woking and Borough Council Audit Results Report for the year ended 31st of March 2020. And I think that comes to Bob, does it?
Apologies, Bill. May I ask a question, which is, when do we agree the minutes of the last meeting?
Oh,
it's an extraordinary meeting, so
yes,
the minutes don't come to the extraordinary meeting, so it'll be the following one after this.
Okay, fine. Thank you very much.
No.
Okay, thank you. Okay, yeah, I think, is it to Bob for Woking and Borough Results of the Report, Audit Report?
Yes, if it's okay with you, Chair, and the rest of the committee, I'd like to take item 48 and 47 at the same time, and myself and Helen are able to answer on both of those. So that's okay, and anybody objects to it? Is there a protocol for this? Do we do a vote? I don't know.
Well, I mean, I'm quite happy as chairman, and if anybody does have an objection to that, could they please raise their hand? Otherwise, we'll assume that they're all quite happy to do that. No, there's no raised hand, so I would assume then that everybody is quite happy, and I'm quite happy for it to be done that way.
Thank you, Chair. Thank you, everybody on the committee. The statement of accounts, unfortunately, are not ready for signing at this stage. Unfortunately, they're largely complete, but there's about 4 items outstanding that we're still discussing with Helen and her team around the audit. She can probably give you more details, but in reality, we've got the 4 items that are key is around the accounting treatment around some valuations. There is work around the IAS 19 statement, which is the pensions coming through from Deloitte from the pension fund, a little bit on the group accounts, and then there's some work around our statement on the going concern of the council. For me, I have no real concerns about where we are. It's just a case of not having enough time at this stage to complete the work with the audit team. Both teams, my team and I think Helen's team, have been working very hard over the last few months around this audit. It does seem that because we're in the COVID-19, it takes a longer time to get the process dealt with, because normally we'd sit down with the team, we'd talk the team through what we've done, they'll tell us what their thoughts are, and we come to a solution. We're currently working remotely via emails, and I think everyone knows that this is not the perfect way of working, but I think we've adapted really well doing it. But it just has taken a bit longer as a process than it would normally take us. Plus, of course, my team have been heavily involved in the response to COVID-19 in terms of the amount of grants and everything we've passed through from the government and also paid out from the council, and the level of reporting that we've had. There's been nothing like it in my experience on the request for information from central government and of course from the councillors and the members of the public of Woking and Borough. So we have been busy, and it's just taken a bit longer than we thought we'd do. Helen will probably give you some more of the details around it, and that's where we are. I can only apologise. I would suggest maybe that there's two solutions to where we are. One would be a further council meeting, sorry, council meeting, audit committee meeting. I don't want to go to a council meeting. I'm sorry about that. It needs to be. That's my plan. If I mention council meeting, people go, oh, "No, have a committee meeting after Thursday." No, we'll have another audit committee meeting, and I know Madeline has a reserve date, which I think is the 22nd of March. Hopefully, people can make that. Or the other option is, providing there's no adverse audit opinion coming through, we would delegate from this committee authority to Bill as the chairman and to Graham Ebers as the chief finance officer, who are the people who sign the accounts anyway, the ability to sign the accounts outside of this committee, provided, as I say, there's no adverse opinion, and we will provide a copy of the final audit report and also the statement of accounts with a reconciliation of what has changed between the last set of accounts we shared with you and the committee date. So I suppose that's where we need to get to. Unfortunately, there's not a lot we can do on the accounts at this stage, but I will take questions. I've got Mark Thompson as the chief accountant along, so if there are any technical questions on the accounts, we'll make a note of them when we get back to the committee. And I can just pass over to Helen to do her part on her report, if you don't mind, Helen. Thank you.
Can I just come in on that? If we have another meeting on the 22nd of March, and back to Madeline as well, are there any other items that would be raised around that time, or would it just be one item that we would need to have that meeting?
Just be the one item. No.
It would just be the one item. I mean, quite honestly, I'm quite happy to take on the delegated responsibilities, but it's if the committee are quite happy for me to do that as well. You would like to see it at a meeting?
Yes, please.
And to discuss it at the meeting?
Yes.
Is that the general feeling of the committee? Yes, yeah.
No.
Okay. Sorry.
Normally it would be fine. I think we did it last year, but I think there are so many areas outstanding that I would prefer to come to a meeting. Thank you.
Okay. And does that apply to other members of the committee? Is it a general feeling, or do you not have a feeling either way? If you do, let me know. Show of hands, or.
I think, Chairman, at this stage, we prefer to hear the reports first before making that decision.
Okay, yeah, so we'll go with the date of the 22nd if everybody's happy with that date. I'll leave that to Madeline to arrange. Sorry, Helen, I didn't mean to interrupt you, but I thought we'd clear that one up first.
No, that's fine. Before I get started, can I just check if I think both Daniel and Rachel at different stages put it, so I don't want to stop any further comments from members.
Right, was there comments? Sorry, Rachel, did you have a comment?
I just wanted to check what the actual deadline is for it, because I'm sure in one of the reports it said that the final audited accounts had to be available by November. So I wasn't sure, sort of in terms of the statutory deadlines, what the next deadline is.
So shall I take that one, Chairman? So there is no. Sorry, I'm getting some feedback from somewhere. There is no actual statutory deadline for the publication of the audited accounts. The requirements of the accounts and audit regulations are that for the year that we are in, for ease, that by the 30th of November, you should either publish on your website your final set of statements that have been audited together with the auditor's opinion, or a statement that sets out why your accounts were not published by that date. So you, along with a number of other councils audited by both EY and other firms, didn't make the 30th of November deadline, for want of a better word. But there's no actual statutory deadline, and there is no penalty as such for not publishing an audited set of accounts by the 30th of November. It's obviously not ideal, but you're not actually penalised either financially or legally in any sort of way.
Okay, that's clear. Thank you very much. Yeah.
Okay.
Daniel, did you have a comment to make?
I was only going to weigh in on the discussion of whether we should delegate authority to you, Bill, to sign the accounts on our behalf. I would have been comfortable with it, but it's not a particularly strongly held view, so I'm happy to go with the consensus.
Thank you very much. Okay, Helen, back to you.
Perhaps, Chairman, that's something, once we've introduced the reports and taken any questions, you can make a final decision. So before I get started, I am going to use the report, unless anybody strongly objects, that we circulated at the end of last week as the basis for discussions. But in all honesty, in the report that we circulated on the 19th of February, we highlighted the key areas that had changed, and there were not significant numbers. So if members do have questions on the previous version of the report, I can be very adaptable in that sense. As Bob has already said, the audit is largely complete in the less complex areas of the work, but there are the 4 areas that Bob referenced to complete. Valuations, the pension fund disclosures, group accounting, consolidation, so not the whole of group accounting, I want to reassure you, and then the final element is going concern. I'll come back to these areas in a moment, but just to sort of say, one of the reasons why the report is not as complete as it should be is that we have already identified with officers changes that will need to be made to the statement of accounts, but we have not included them within the results report or amended them at this stage, as there are likely to be a number of other changes that are going to come through, particularly from the work around the valuations on property, plant and equipment. Those in particular have a significant kind of roll through the disclosures within the financial statement. So if you change one figure in relation to a valuation, for example, it rolls through a large number of notes, as well as the primary statements. And so what we've agreed with officers is, rather than having multiple changes to the accounts, which are difficult to keep track of, we will consolidate all of the changes into one, agree those, and then have a process where we'll try and work out the best way of making sure that those changes go through sort of right first time, as it were. Normally, obviously, in a normal circumstance, we'd probably sit down with Bob and his team and kind of almost do it side by side. Obviously, in these working circumstances, we can't. So that's the reason why you don't have as much detail as you may have expected. Just to touch on on those 4 particular areas that I wanted to pick out. On valuations, it's very much, this has been an area of focus for reviewers of audit quality, so the Financial Reporting Council and others, and so it remains a key area of focus, and so the work that we do in this area has significantly increased over the years. I can probably break it down into the three areas that we're still working on. One is that we asked our valuation specialists to review 11 assets, which we selected sort of at random, but they were sort of either the larger, more complex assets to value, or they were representative of a wider sample. There are open queries on 4 of those 11 assets. And in a couple of instances, the queries that are outstanding could have a wider impact on the rest of the asset portfolio, but they may not. And so we're working through those queries at the moment. Secondly, for the assets that were revalued as at the 31st of March, so valued in year, not council dwellings, this is looking at operational land and buildings, the work that was being done on our audit team, within our audit team, identified a number of queries which led to a review of the source evidence that was being used for the assumptions that were then used in the valuation, if that makes sense. So that's included some work that your internal valuer has gone back through to sort of update the source evidence, and that will be the source of a number of some of the amendments. And then the third area is that for the assets that we revalued in prior years, so those were the assets that were valued at the balance sheet in 2019, 2018, 2017 and 2016, one of the things that we've been challenged on through quality reviews is what processes do you have in place and what processes do we have in place to ensure that those values are still materially correct? So obviously they've been through a valuation process at a point in time, but a number of years have passed now, and so things could have changed. So we just need to look at that. In each of the areas, at the moment, we don't know that there's anything wrong. So this is not an indication of a problem, but we know that there are likely to be some changes, particularly from that side, that evidence point of view. And so again, we've not included the detail because we don't have all of the detail at this stage. It's very much a case of working through that. One thing I would say is very much welcome the council's consideration of updating both their own valuation approach in the future. So looking at potentially employing an external specialist, an external valuer to provide support to your internal valuation team, and starting to maybe reconsider the review or the cycle for valuations. So at the moment, and I'm summarising greatly, but you tend to take a group of similar assets and revalue them all in 1 year, which is fine. It means they're then accurate for 1 year. But then if you wait another 5 years before you revalue that group, it's more difficult to get a benchmark about whether the valuation is right. So I know from talking to Bob, one of the things that's being considered is taking a proportion of assets from each asset category each year and then revaluing, and then that gives you some better benchmarking to use. And we do very much support the move towards that. So that's on valuations. The second area is our old favourite, which is the assurances from the pension fund auditor. So we received the report from Deloitte in January. However, it was issued before the pension fund audit was completed, or has been completed, because I think it's still in progress right now. And so it raised a number of review queries, and then just due to the timing of when that was picked up and talking to Deloitte, we have a meeting this coming Friday to discuss that. The third area around group accounting, it's again, I think I said this last year, an area of focus from audit quality reviews. I'm pleased to say we've reviewed the work of the component auditors, so Haslers and Hazelwoods, and we have no issues or queries over the work that they've done. What we identified is that the accounting policies, particularly around property, plant and equipment, differ between Wokingham Borough Council and the subsidiaries, and they should really be aligned. So that's the work that's going on to align the accounting policies and then to restate the figures through. And I know that's very much a work in progress. And then the final area that Bob highlighted was around going concern. Obviously, it's been an area of focus this year because of the COVID-19 pandemic and significant change to income streams, expenditure streams. We've got management's proposed disclosures, updated disclosures, which will go into the financial statements. We've got the cash flow and we've got the supporting documentation, which we are working through. And then that has to go through an internal to us consultation process, which should be relatively straightforward. We've gone through a number of these now, so we've got the hang of it, but that will probably result in a bit of to and fro discussion with Bob and Graham as Section 151 officer over the level of disclosure and tweaking that, I suspect. So that will be something that will come into an updated set of statements. And so that in essence is why, as Bob said at the start of this, is not really in a position to be able to present a final set of statements for the committee to approve, or indeed a final results report setting out the findings from the audit, although we have included a number of findings and I'm sure members may have questions on the report. But just to wrap up, in terms of the next steps, we're pulling together a plan that we will agree with Bob, the finance team, and more importantly, the sort of valuations team, who are equally stretched and having to do many things in terms of what exactly needs to be done and what timetable are we working to, so that if we are working to a later committee date in March, then we've got a plan to be able to achieve that. And regardless, we would, whether we go for an audit committee and another extraordinary audit committee in March, or whether we are going to go for delegated approval, we would update the audit results report and circulate it to all members before the accounts are actually signed. So that is kind of where we're at, and I'll probably stop talking for a moment and then take any questions, Chair.
Well, thank you very much for that. Yes, we have one hand up at the moment. Rachel.
Thank you, Chairman. And thanks for your introductions, both of you. First, I just wanted to ask a few questions on the valuations part. I mean, I was going to ask why it's taking so long to resolve this, because it's almost a year on, but you've explained that to a certain extent, Helen, so thank you for that. You do say that your work will raise, has raised a significant number of audit queries, and you have explained that again to a certain extent. Is it possible to say what the impact of that is likely to be at this stage? I mean, specifically the effect on the income and expenditure statement and the balance sheet. I mean, I presume we're talking about a reduction in assets compared to what's shown here, or is it just you can't really say at the moment? And then just a second one on a similar theme, if I may. On the revaluations, you also touched on this a little bit. I realise that the investment properties obviously are valued every year, but the other assets are done on this rolling basis. So what is it specifically that's caused the big credit to the income and expenditure statement this year for revaluations? I think it was £64 million credit, which has a big effect on the final bottom line, and a big change since last year, which was a lot lower. And also, does Bob support what Helen was saying about a different way of selecting the assets for those rolling valuations that might avoid such big shifts in the income and expenditure statement?
Okay. So in terms of the impact on income and expenditure, I'm hoping that either Justine or Fran will correct me if I get this wrong. Based on the amendments that we have collated to date, largely it's there will be adjustments that impact, but they will net off against each other. So there's grossing up, for example, on both the income and expenditure side, and then there's some changes between categories. So there will be changes like that, but they have no impact on the bottom line. I think your second question, if I can summarize, was largely, is the asset valuation going to go up or is it going to go down? I think I would prefer probably not to nail my colours to the mast on that one right now, because just because we have queries doesn't mean that it's wrong, and just because we have queries doesn't mean that we think it's overvalued. So I would rather wait until we have worked through all of them, sure, and then come back with a proper answer, because otherwise I am just guessing effectively.
Right. Yeah, fair enough.
And then I think you asked what's caused the particular shift in valuation this year. I'm not sure that I'm close enough to the detail on valuation, because I haven't reviewed because we're still working on valuations. I'm aware of the problems, but I haven't looked at the detail behind it. So I don't know if that's either one that Bob or Mark or one of my team might be better placed to answer.
Yeah.
Stage, does Mark have an answer? I think it's just recognition of the assets we've done during the year, but I'm sure Mark will confirm.
Yeah, hi everybody. I haven't got the exact details, but I suppose just to point to the accounts note 23, which is a breakdown of the revaluation reserve. I think it's page 128. So this shows how our valuations have changed. So the main driver for the net £64 million credit to the income and expenditure account is a upward revaluation of assets of £79 million, and then a downward revaluation of 15 million. I think, as Helen mentioned, the way we revalue assets every 5 years may be a key driver for that, because obviously a large chunk of assets have been revalued for the first time for 5 years, and that's created a upward valuation change.
Okay, and so will you be considering whether that's the right approach going forward?
Almost certainly, yes. But part of what the discussion I had with Helen was potentially what I know is good practice in other councils I've worked at, but by taking a sample across all the asset types gives us a very good proxy to what will have happened across those asset types. So if you see one that's coming out with quite a large revaluation upwards or downwards, we would then say, well, that's a good indicator to look across the rest of that asset type, even as a desktop valuation. So what we'll be getting is, I hope, a more accurate position each time without these large swings every 4 or 5 years, and allows us to do a desktop, or it gives us a pointer to where desktop might be a useful exercise to do in that thing. And we would do that just so that people are aware. What we do is we have it done on various classes of assets and asset type, but we also give specific instructions to the valuer if we feel there might be a significant area where revaluation or even impairment might be necessary, and will indicate certain key assets to the valuers to do it on a annual basis, which will vary. But I say a basket of goods, I think the phrase we'll be using, is probably the best way to go going forward.
Okay, thank you. I did have a couple of other questions, Chair. Am I all right to carry on? Or?
Oh, sorry, can I come back to you shortly? There's a number of hands up and we'll come back to you. Okay, next is Angus.
Thank you, Chairman. One comment first. It seems that we're held up again by Deloitte and the pension fund, and I just hope that doesn't become a continuing factor in future years. My question is, we're talking about valuations now, almost a year after the end of this accounts period. Isn't it more and more difficult to get to accurate valuation figures of something that's now 10 months, 11 months old?
Shall I take that one as a starting point? I think, in fairness to Deloitte, I don't think they are the only hold up for us being able to complete the audit this year. Obviously, last year was a slightly different position, and I think they, like all audit firms, have struggled. It's not been an easy year in which to carry out audits. In relation to valuations, it's a very good point, but actually the sort of points that we are looking at is the assumptions that are used in reaching the valuation. So, as I said, one of the things that has been identified by my team as opposed to our specialists has been when in going back and looking at the valuation. So say, I know I'm making this up, okay, but if you're looking at a primary school, we're looking at things like floor areas, we're looking at different assumptions that are used to build up the valuation that then appears in the accounts for that particular item. What we have then found is, can you actually find the accurate floor areas or those sorts of assumptions? So it's going back and actually checking that there's some details behind it. So that's one part of it, and that's not really affected by the time of year that we're doing it. It's whether the evidence is there or not, as an example, and that is just a pure example. It's not necessarily real. The other point is around, and there genuinely are differences in opinion between different valuers about what should or shouldn't be used in terms of yield, for example, on assets that are valued at market value or at fair value. Or there can be differences in assumptions that are used by valuers around the residual value at the end of its life. So those are the sort of things that we are looking at, and they're not really immediately impacted by the timing of that. The one that is most impacted would obviously be those at market value, but we've got information, both we have and your valuers will have information that will take it back to 31st of March. So that's not really the biggest problem. The moment it is probably a scale of enough time to be able to work through the challenges, and our valuation team was delayed, in all honesty, in getting their report back to us. So we got it a week or so ago, which is obviously much later than we would have expected. So I hope that helps answer.
Yes, it does. Thank you.
Okay, Maria G.
Thank you. I'd just like to follow up with Rachel's question. I noted in the original report, which I went through in some detail and then realised I had to do the other one, that playing fields were valued at £1 million per acre, but that's disappeared from the final report. Was there any particular reason why that happened?
So we took out some of the detail just because we were trying to work it through. So part of it was to do with a query that we were working through. So it's not disappeared as such. It's one of the queries that we were working through, and it was a level of detail where so it's whether the playing fields are valued at the right amount, and then there was other land that was very similar in nature or close in geographical nature that was being valued at a different value, and that's the source of our query, and in terms of which is right and which is wrong. All that detail will come back to the committee in a final report. Sorry, I just want to reassure you.
Yeah, I was thinking £1 million sounds like a development value, whereas if it's in property, plants and equipment, it should really be on sort of current use value.
So for playing fields, and again, so this was a discussion we had with our valuer last week. Yes, you're right, but it also depends on what you're looking at is what's the availability. If you had to re-provision or replace that playing field with another playing field, what would you have to pay for it? And in a developed borough such as Wokingham, it is probably going to be at the higher end of the scale. But that is one of the things that we are looking at. So it's not necessarily the value. You're right, it's the value of development land, but it's not the value of what you would get for developing. It's the value that you would have to pay if you needed to, if you replace it with another playing field.
Value, yeah, in effect. So to replace the value, so reflects the market values in the local area in any case. Okay, I've got 2 other queries. The second one is with interest rates going down, and I know that Rachel has raised this before, and pension accounting for defined benefit schemes. Are we ever going to get to a situation where it's almost impossible to value future liabilities? Because if you did it on a sort of using a discount rate, it would just be massive. Which brings into question, obviously, the financial reporting standards to do with pension liabilities in any case.
It does. I'm not sure I necessarily want to go down that route, if I'm honest.
Just in general. It's not my area of expertise, but I'm just wondering what would happen if we got into negative interest rates?
Again, I'm not the expertise of that area as well, which is why we do rely very much on the actuaries who can do it, or claim they can do it. They change their mind every 3 years, and the ability of the auditors to challenge the actuaries and their assumptions. We do look at what comes through from the actuarial reports, but without having the expertise in the team to challenge on technical matters, we just look to say, does the number look reasonable compared to the rest of the Berkshire area, I think, and that's our main guidance. But we do have to rely very much on the experts we do employ.
I think it's a good point in terms of looking ahead into future years, because obviously there has just been one of the a review of the pension fund, the triennial review. Just to explain how it works, because obviously I'm no actuarial expert either, and so the work of the actuaries is the NAO commission on behalf of all of the audit firms, PwC to review the work of the actuaries as a whole. We then use our own internal pension specialists to review the work of PwC, and then we work through the challenges from that. And I suspect that may start to come through. We might start to see that coming through in terms of things to think about for 2021 and onwards. But it's a really good point. I just don't know the answer, in all honesty. I'm not going to pretend.
So my last question is, so in the last audit meeting, we raised the point about sort of corporate governance and who this committee should be reporting to. And there was also a bit of a discussion at the council meeting. And I don't want to preempt what the monitoring officer or the chief executive should say, but just to say that I feel that when we agreed the revised local code of corporate governance, somewhere along the way, the reporting line from this committee to council has been overlooked in the way we do our reporting, because I think the local code of corporate governance has been updated, but our reporting line has not. And I think this has caused the issue that was raised at the last council meeting, which is that we had 2 reports going to council on the Treasury Management midterm report. So I just wanted to raise that in the context of internal control. Now, I know that you did substantive testing because I read, and so you didn't really rely on internal controls, but I feel this is an internal control issue that should be brought to the attention of the committee.
Can I just come in there? I can say that there is a report coming back to council in March, and Andrew Moulton is currently working on this. I think Andrew's in the meeting if he had anything to add to that. But the function of the...
Bill, I don't want to bounce anybody into anything. I'm just raising the issue for awareness, and I'm happy to wait to come back. Thank you.
Okay. Yeah.
That's it. Thanks. Back if I've got any more questions after Imogen and Rachel.
Yeah, Imogen, I think, is next. Hello, Imogen.
I am.
No.
Turning my camera on. Yes, my camera is on. Yeah, I mean, a lot of what I'm concerned about has been said. You know, I'm disappointed about the pension scheme. But my question is on the revaluation of property. 5 years seems an awfully long time, especially when we've got COVID. This report is obviously pre-COVID, but in the subsequent year, COVID's going to have an effect on all of these things, and it just seems that perhaps these should be reviewed a bit more often at this particular moment, especially as it's on our risk register in the report later on, where we're obviously concerned about property values. If that makes any sense.
If I can just say, there might be a little bit of a misunderstanding that whereas we have a evaluation cycle, we do look at the values of the properties, as do the external auditors, on a regular basis, hence why we're having these conversations now. If we assume the values would be the same and the auditor said, no problem, we'll just do it every 5 years, we'd have closed the accounts and probably be not home scot-free, but certainly would have finished off a long time ago, just waiting on Deloitte. So we do desktop valuations in the interim as well.
It just seems that at this particular moment in time, we've got an element of risk with our property values, and we need to do it more, basically, is what I'm looking at. Does that make sense?
Yes, and certain categories are valued every year as well. So it's not everything on a 5-year cycle.
No.
If I may, I think it's what the council is doing is not unusual. A number of other councils do take a similar approach. However, as I said, we're kind of coming at it this year or increasingly over the last few years, where we have been challenged more by our regulator, so of auditors, in terms of the work that we do on this, which is then in turn turned into greater challenge of how councils do things. As Bob says, there are certain categories of assets, so investment properties which are held at fair value, which are done every year, and we are fully aware that the council does highlight other categories of assets that need to be revalued. But I think putting this onto a more formal basis and using a sample, instead of taking it almost asset category by year, cutting down the other way, I think is going to give a better benchmark and will allow, should smooth out some of the bigger swings. That said, we don't know what's going to happen in terms of market values where they exist, but a large number of your assets are valued at depreciated replacement cost. So it's much less of a swing.
I also would like to say that the report we've got on the website, which is different to the report you emailed out on the 19th, it says London Borough of Richmond upon Thames audit results.
That's really annoying because I've changed that twice. It seems to be something to do with the way in which it PDFs. So if we've used a template that's been used everywhere else, it somehow everywhere else it will say Wokingham, because I've checked everything.
Yeah, I looked at the report. I thought, well, it is Wokingham, but
yeah, I really don't know why it PDF'd that way. And I did try, and I've checked it as well. That's even more frustrating because when I sent it, it looked fine from my end, but clearly I think it must be something to do with how PDF exchange works. Just goes to show you should always start from the template, not
just because it's on the public website.
Yeah.
Okay.
Thank you for pointing it out.
Thank you very much. We come back to Rachel.
Thank you, Chair. Going concern I wanted to ask about, obviously we've said before that that's been a particular concern or particular focus this year. It's a question for management really about what stress testing has been carried out for going concern and how much headroom there is. You know, basically how wrong would our forecasts have to be in order to sort of threaten going concern assessment, and how comfortable are we looking like 12 months ahead, you know, taking that stress testing into account?
If I can take that one, unless anyone else wants to jump in, but to be fair, it's always an argument between ourselves as a council and with the auditors. All local authorities should really be deemed as a going concern because they're backed by Her Majesty's government. So in the cases of Croydon, which we saw recently do a 114 notice, or Northamptonshire, which was 2 or 3 years ago, now the government would step in and either appoint an administrator to run the council's affairs, but they would not let the council fail to cease to exist. Although in the case of Northamptonshire, they disbanded the county and district model and introduced 2 unitaries. So it's always a moot point in that in a private sector organisation, going concern is a different sort of aspect to where we look at it in terms of local authorities. That said, Wokingham is not at anywhere near a 114 notice. And this is just part of the questions that we're answering, and we're producing the statement on behalf of the council that the auditors will review when they give their assessment. But we have adequacy of reserves, potentially our general fund balance and earmark reserve cover actually would cover us for a whole year of trading without having to draw any council tax. That's never going to be the case. Wokingham has actually the highest council tax collection rate in terms of collection from our not in terms of the level of council tax, but in the level of collection. We currently run about 99.4% collection rates, which is, if you look at other authorities, we are at the top of that term there. Throughout the COVID pandemic so far, our collection rates have held up. Obviously, we're making assessments around the amount that we may not be getting, but certainly we wouldn't expect to see our collection rate drop below 98% if we can't maintain our current rate. So in reality, as we get very little funding from central government, and most of, well, 90% of our funding comes through from our local council tax collection, there will be a huge amount of drop in our collection rates in order to put us in a position where we're no longer a going concern. So hopefully that is to reassure people that we have reserve balances, we have a collection rate that allows us to maintain where we're going, and yes, Wokingham is in a sound financial position.
Okay, thank you. Could I also ask a question about the finance team? So I noted in the report that the finance officer has been particularly stretched this year, you know, not surprisingly, and the report suggests that senior management will review the staff capacity in finance. Can I ask what management are doing about that? Are they going to address that recommendation?
If you're including me as senior management and that sort of aspect, then yes, I am. I have already put forward a revised structure for finance that enhances where we're going forward. It has been noted that since C21 transition programme came into effect, we've expanded the size of the finance teams in both adult social care and children's services, supporting those 2 services, and we've seen a turnaround in their performance in terms of budget monitoring and actually budgetary control. So it does pay dividends. That is my main business case for making sure the finance team is where it is. Of course, it'd be very easy and very nice to have the world's biggest finance team that's resourced to the peaks of workload. Unfortunately, it wouldn't be fair on the taxpayer to take all the money that comes in from the council tax to make the world's biggest finance team. So we have to do a certain amount of being corporate with the size of our team, but actually section 114 subparagraph 7 of the Local Government Act does state that the council must resource the finance team properly. So we've said if there are concerns for myself or Graham, we would raise that, and it's also in the council's constitution that the CFO must have a properly resourced finance team. As it stands, I believe the proposed structure that I'm putting forward, which covers a wider remit than just corporate finance and business partnering is one that would be, I believe, sustainable in the future and allowing me to flex where I need to. But again, I'd rather resource to not the minimum level, but a reduced level, and then flex if I need to get to the peaks. It's better value for the taxpayer that way.
Okay, thank you. My last question, it just follows on for some previous comments actually to do with corporate governance. I know in the September Audit Committee meeting, we discussed the effectiveness of the Audit Committee, and we actually committed to running a survey to identify strengths and weaknesses of the Audit Committee and what training members might need. So I wanted to ask what the status of that was, particularly as it's raised in the auditor's report that we should be complying with the SIPFA Audit Committee best practice requirements, especially to do with Audit Committee self-assessment. So is there anyone that can give me an update on that?
I think, Madeline, you were dealing with this, weren't you?
No, I believe it was Andrew.
Oh, was it Andrew? Sorry. Andrew is there, is he? I don't know quite where we were. I know there was a date given, I thought, when we would be bringing this to the committee. Hello, Andrew. Can't seem to raise Andrew, the man with the answer. Andrew, are you there?
I think
just come up on. Sorry, yeah, carry on, Bob.
Sorry, Chair. I think Andrew might be double booked. He's also got a corporate overview and scrutiny committee tonight, so he might be multitasking and sharing his time. Is it possible that we take this back in Madeline, because we raise it with Andrew later and provide a written response? Or
yeah, that's fine.
No
thank you
problem.
very much.
Thank you.
Very much. Okay, thank you, Rachel. And to Maria.
Okay, yeah, I'd just like to follow up on Rachel's point about staffing. I'm very worried that the staffing does not appear to be adequate. I think I'm a little concerned about Bob's response that we want to keep it at the minimum and then flex to get up. That doesn't, it's a bit like having a 95% occupancy of hospital beds. You don't have any flexibility within that if something goes wrong. So could we have a report at the next or the following meeting about what actions have been taken and the sort of level of staffing we're actually looking at?
I imagine we can. I mean, to be fair, the reason why we have struggled this year, and we are not alone, it's every department in the council, is that the council has, in response to the COVID-19 pandemic, redeployed a lot of staff across the area. So whereas the council has protected the finance team, so I've fought very strong that we are protected, what it's meant that the team that support the finance team have been redeployed. And it's only fair that the council and the support services area does provide its fair share of people to redeployment. So it's meant that the specialist team that I manage, and also the other teams I manage, have had protection from being redeployed, but have had to take on more work around that area. Additionally, as I did say earlier on, Mark and his team have absolutely been inundated with the amount of government returns that seem to keep coming through on an ad hoc basis. So everybody wanted information from day one of the COVID pandemic. And as you probably know, Maria, all roads lead to finance eventually, because that's the pound signs. So we've done the best we can with it. And I'll be reluctant to go and say, I need a huge increase in the team just to cover off the one-off scenario. I hope it's one-off scenario of a pandemic. But again, it is that getting the structure right, certainly. Happy to produce a report, but I'd rather actually see what happens in terms of the proposal I'm putting forward for the team structure, and then confirm what size the team is and what I think will be adequate.
Okay, that sounds like a good plan. Okay, I have two specific queries on the accounts. I noted in the accounts that we'd increased our lending to the subsidiaries because they've made losses, and I just want to check that those, I guess they must be long-term debtors, are actually thought to be recoverable. I did notice that each of the subsidiaries did have some net assets, and I just want to make sure that those amounts are recoverable, or if we have made any provisions against them just in the single accounts rather than the consolidated.
Yes, no, certainly. I would correct the fact that we haven't made loans to the companies because they're making losses.
Oh,
we have made loans. We've made loans to the companies to allow them to continue doing development around the housing area. So that's why we lend money to them. It is potentially a desirable situation for the council to keep the level of profit in the companies as low as we can for tax purposes. It's good tax planning to ensure that we'd rather take money from the companies in terms of a proper rate of interest than for the companies to have a subsidised rate of interest and then make profits and pay us a dividend post-tax. So there's an element of tax planning in there, which is standard across any form of commercial organisation as well as local government. So the loans are not to support the losses. The loans are to enable the companies to keep doing developments and housing.
Okay, I must have misread it. I'll see if I can check that. And the other thing is, I noticed that in the borrowings in note, try to see if I can find the page, 151, that the fair value of the borrowings, which I know is not recognised in the accounts, is some 90 million higher than the borrowings. And the explanation is that some of the loans that have been taken out are at a higher interest rate than rates available for similar loans in the market at the balance sheet date. Is that just a matter of timing? How do you do the like-for-like comparison? Was it the best rates at the time, and now with hindsight, obviously, it looks not so good, or is it somehow the fact that an inappropriate decision had been taken at the time, which results in the fair value being higher?
Mark could probably answer the technical aspect around that, but yes, when we take out a loan, we take it out at the prevailing best rates at the time. And 2020 hindsight is an amazing thing. Certainly when some of the loans were taken out, and some of these go back to, I think, early 2000s, or even some of its old Berkshire debt from 1998, or was refinanced Berkshire debt and divvied out. And the rates at the time, around 7-8%, were deemed to be very good. Now, obviously, we sit here at historically low rates of 0.1, but I wasn't here at the time, but if I was able to predict how rates would have gone, I wouldn't be sat here now anyway. I'll be sunning myself with Bill Gates and that lot, or Warren Buffett.
That's what I thought might be the answer. I was just checking. Oh, there is one final little question. We've had lots of these revaluation adjustments upwards, but I was a bit concerned to see that we'd made a loss on the disposal of some property, plants and equipment, which was almost equivalent to the net book value. And so I was a bit concerned that we possibly have got our depreciation or useful lives incorrect. And looking at that loss in the context of increases in value, can you explain what happened with those £16 million worth of assets?
I can't at present, because I'm not sure what the assets are, but I would assume, and I'll probably, hopefully I'm right in what I'm guessing, that would have been a school that converted to an academy, and therefore we have to write it out of our accounts, our books at the book value. So it would have, I assume that's what I'm sure Mark can confirm if it's the exact asset, but it sounds very much to me like an academised school.
Okay. Mark?
Yeah, I can't confirm which asset it is, but quite often, yeah, when a school transfers to an academy, we have to write the asset out of our books and we get no sale proceeds. So from an accounting point of view, you recognise a loss, but that loss is reversed out of the movement in reserve statement. So it doesn't have an impact on the bottom line, but we just have to show it for our accounts.
Okay. Do you think you could just confirm it after the meeting? That would be great.
So Fran messaged me while you were talking. It is a school, so so it sounds like that, but I think probably best that that's confirmed to you in writing so that you are sure.
Okay, that's it. Thank you very much.
Thank you. Okay, I don't think there's any further questions, so thank you very much everybody who's given the reports and taken the questions. On those two items, item 47, 48, we are asked just to consider those reports, so there's no vote needed or anything at all. So thank you very much for that. We come on to, yes.
So sorry to be a bit of a pain, but just for the purposes of being able to plan, are we clear about whether there is going to be delegation of approval to you, or whether there's going to be a committee, a further committee?
No, I think there's going to be further committee. I think the general consensus.
Was it?
Yeah.
Okay, thank you.
Yeah.
That's what I thought.
Okay, thank you.
I wanted to double check. So.
Yeah. Okay, thank you. Okay, on to item, where are we? 49, corporate risk management. Hello, lost the picture. Corporate risk management. I don't know who's leading that one.
Chairman, that's me.
Oh, you are there.
I must apologise. I'm on my phone now. I lost my connection on my laptop.
Okay, that's fine.
Rachel's question.
Yeah, do you, while you're there and you're available, do you have an answer on the SIPFA survey as to when it's going to be?
Fair point. We are working on it, and we will have it out as soon as possible. But it is a fair point that Councillor Burgess raises.
Okay.
Can I
pressures are on. Sorry.
Can I take you through the risk management report?
Sorry, I was muted. Yes, if you would, please.
Thank you. And apologies, this might be slightly garbled, seeing as I'm on my phone, but this is agenda item 49, pages 207 to 231 on your papers tonight. So the recommendation is for the committee to consider and note the risks and mitigating actions of the council's corporate risks as detailed in the corporate risk register. If I could take you to page 209, just to give you the headlines in terms of changes since the last meeting that you considered this back in November. So just taking you through some of the specific risks. Firstly, risk number 1, budgeting and financial management. So the corporate leadership team has reassessed that from the very high category, which is the top category, down to high, following the council considered a balanced and approved a balanced budget at its meeting last Thursday evening. However, it is still considered to be a high risk. There are certainly uncertainties around local government funding in 2023 and beyond. So that's one that we need to continue to pay close attention to. Risk number 10, the end of the EU transition risk. We have a particular issue there around, as it says in the covering report, around the UK being considered a third country for data protection purposes. Just to update the committee, though, the government on Friday released a press release that gave some further reassurances in terms of the ongoing negotiations between the UK and the EU, where it looks significantly less likely now that the EU would consider the UK as a third country. So I believe that risk will be very significantly mitigated over the next few weeks as we get further information around those negotiations. Risk number 12, the adult social care provider risk, has been reduced, like risk number 1, from very high to high, given the mitigating actions that have had a positive impact that are set out in the detail of the report. Risk number 13, climate emergency. Obviously, Councillor Cowan's question this evening raised some specific questions around that particular risk and how that was being mitigated. As I say, I just draw the committee's attention to the report that was considered at executive back at the end of October with regard to that particular item. Risk number 17, equalities. A lot of work has been taking place on that with consultations, etc. And the updated and revised equality plan will be going, it does say in the report later this month, it will actually now be going to an extraordinary executive meeting, I believe, which is on the in March. Risk number 18, the pandemic risk. Just to say that the findings from the scrutiny process are going to a special executive meeting this Thursday So the detailed recommendations with the officer response to each of those recommendations are made and considered on Thursday evening. Risk number 19, housing numbers, has been reassessed from high to medium following the government's announcement in mid-December, where they amended their position that they consulted on earlier on in 2020. And then finally, this time we've got 2 additional risks that have been added to the risk register. So number 20 is around market failure. This is very much sort of work in progress at the moment. We're looking right across the key services that are delivered on the council's behalf by the private sector, by partner organisations, looking at what support is in place to mitigate any risks with regard to market failure there. And then finally, last but not least, couple of weeks ago now, the government announced that the elections this year were going to go ahead in May 2021. So that's obviously still within the context of significant public health restrictions. So there's a lot of work underway with regard to that. But because this is such a significant sort of corporate event for the council, and because of the additional complexity this year, it felt appropriate to add it to the corporate risk register to give it that corporate focus that will help us to deliver a safe and secure election on May the 6th. I'll pause there, Chairman, and happy to take any questions, but you might need to bear with me. I'm trying to log onto my laptop at the same time.
Okay, thank you very much. First question is from Rachel.
Thank you, Chair. The main points I had were around the climate emergency risk, so I'd like to start with that one. I mean, I continue to be of the view that the controls that we've got listed here and the mitigating actions don't adequately address this risk. Some of the points of detail on that. So we've got the cross-party member climate emergency group is listed as a control here, but these aren't meetings. These are meetings that are not public meetings. That, you know, the minutes of these meetings are not published in any form, and I'm not aware of any action arising from that group that's actually made it to the climate emergency action plan. So I'd question whether that really is a control there. And then you've got the overview and scrutiny management committee task and finish group, which is a control, but it isn't listed. And I think it should be listed here. So this is the group. This group has been scrutinising the plan, the climate emergency action plan, and has made changes. So that was the group that instigated the line-by-line carbon against each of the items in that plan. So that has had some good effect. But there are some recommendations from that task and finish group that haven't been adopted by the executive. So it is, for example, it was recommended by that group that there should be an independent accounting style audit of the carbon savings on the plan. But that hasn't been done. I mean, perhaps we can come on to that in the internal audit agenda item next. Now, the sort of final point on this, so the plan itself is obviously listed as a control, but as I've said before, it's got errors in it, and these errors are not being actively engaged with and sorted out. So, I mean, one big error in this plan is to do with vehicles. So the action plan states that 50% of vehicles will be electric by 2030. Now, actually, the detail of that, it's not all vehicles, it's 50% of new vehicles. And the carbon savings in the plan are listed as 45,000 kilotons, right? So that's about something like a quarter of the total savings. It's a really big chunk, but actually that estimate is completely wrong, and it should be more like 4.5 kilotons. It seems to be completely wrong, but these errors are not being actively followed up and sorted out, despite the fact that that's something the task and finish group has called for. And there are other examples of items in that action plan which are now sort of defunct. So the green bank idea, for example, is now defunct. So I know there's quite a lot of detail there, but just to summarise it, I think the actions listed really do not address the risk of the borough not being carbon neutral by 2030.
Okay, thank you for those points. Just in terms of the specifics that you raised there, again, I would agree. The scrutiny is the sort of constitutional group that is scrutinising the climate emergency priority, and you know, that's an oversight on my part that that's not referenced in the corporate risk register. It certainly should be, and it will be in the future. We'll add that on from this evening's discussion. As you say, in terms of the recommendation around audit, you'll see in the next item that an internal audit of climate emergency is proposed for Q1 in 2021-22. We're working through at the moment exactly how we'll do that and how we'll take on board the recommendations that have been made. So that's where we're looking to pick that up. In terms of sort of broader points, I can certainly take these points back, and possibly there's a conversation perhaps between the chairman of this committee and the chairman, the appropriate chairman of Overview and Scrutiny, to make sure that all the audit committee's concerns around this particular risk are covered in the work that Overview and Scrutiny are undertaking. But thank you for those comments, and I'll certainly take those forward.
Okay, thank you. I do have a few other points, but perhaps you could come back to me, Chair.
Yeah, I will do. Thank you very much. Maria.
Yeah, I have a few points, but I don't mind coming in and going out. First of all, I noted the comments in the auditor's review that we had a lot of very high risks and we're supposed to be a low risk council, and I just wondered how we were going to get down to low risk. And secondly, a point raised by Justine when she came along to the previous meeting, that in fact we're doing the wrong thing on this risk register, but I have no clear idea what it is we're supposed to do if we don't do what we have been doing. And I'm wondering whether Andrew or Bill or whoever can clarify what changes are going to be made in respect of both of those items. Thank you.
Okay, well, in terms of the first the first point, so this is, and you referenced EY's work on that. I would say from my perspective, I think the points that were made by Justine and Helen earlier on in the municipal year were really helpful, certainly to officers, in terms of looking at the presentation of the report. We're taking those points. Some of those have been addressed. Some of those are on our improvement plan in terms of how we get an even more effective means of scrutinising risk management. So yeah, that's absolutely sort of in train, and maybe Helen or Justine might like to comment on that in terms of how we take that forward further. In terms of the sorry, what was your second point, Maria?
What was the second point? Oh yes, that's right, Justine, and also in the report that we've got attached to this risk register said that we're really doing the wrong thing in relation to this risk register, but I've no clear idea what it is that we're supposed to be doing. So I would regard that as a training need, because what is it that we are supposed to be doing in relation to the risk register? Because it says we're not supposed to be doing a deep dive. So what are we supposed to be doing?
Yeah, well, that's a good question. I think part of it is a training issue, because it isn't around the detail necessarily on individual risks. It's about receiving the assurance that the process of risk management in the council is sound. And if I just sort of, hopefully this is helpful, if I just read out from the terms of reference for the committee, in terms of your remit under risk management, it says providing independent assurance of the adequacy of the risk management strategy and the associated control environment. So in particular, and specifically around risk management, it says receiving quarterly reports and reviewing implementation of the council's risk management policy and strategy to determine whether strategic risks are being actively managed. So I guess that's about sort of having the helicopter view of the risk register in terms of is it a fair representation of the key risks that you're aware of as a committee, and looking at how they're being managed. And I guess in the most mature organisations, you'd see some risks coming on. We've had 2 new risks tonight, but you'd also see risks moving off the corporate risk register to be dealt with at a directorate level. It goes on in terms of reference to talk about reviewing, revising as necessary, and recommending adoption of the risk management policy and strategy when changes occur. And again, you've done that earlier on in the year, but it does talk in the final section here and talks about having the knowledge and skills requisite to your role with regard to risk management, and to undertake awareness training in respect of enterprise risk management as and when specific training needs are identified. And I think, going back to Rachel's point, that may be something that will come out of the self-assessment in terms of the effectiveness of the audit committee, certainly in terms of the induction and the training for new committees in the new municipal year. Risk management is very much up the agenda in terms of training that we need to provide.
Yeah, I see, Helen, you have your hand up. Can I come to you first, if you have something to add to that?
I think I just wanted to kind of reinforce Andrew's point in what we were saying, and I think his statement of helicopter view actually was quite a helpful one in some ways. Should not really be the role of the audit committee to get hugely involved in what is being done to address the risk, and whether it's very much around does it look like the right risks are on the agenda, or have you got confidence that the appropriate people are taking the appropriate action at the right time to address the risks? And as Andrew said, you would expect in a mature organisation, which is where you're moving to, risks should come in and they should go off as well. You should be able to mitigate. You should be mitigating them down and getting to a point where what your tolerance is to that level of risk, and that will vary from risk to risk. They will all be different. So you'll have a different tolerance to a financial failure to maybe one of the service failures or something like that. So it's risk management is always a sort of a developing thing. But I think in terms of the role of the audit committee, it's finding that right balance between understanding what is going on but not getting involved in trying to drive it forward yourselves, because that's not really the role of the committee. It's being confident. You should be confident that the processes of the council are addressing the risks.
Okay.
Back to you, Maria.
I just have to think about it a bit. I think maybe some training with some examples from the current risk register, or some examples that they've done in other councils. And as Rachel says, something about the questionnaire as well. I think that's going to be useful in looking ahead to what we do. Thank you.
Thank you very much. Sorry, to Imogen. Yes.
Hello, turning my camera on. Right. Okay. I'm sort of in disagreement in that we need to have confidence that the risks to the business or to the council are being dealt with, and sometimes that requires a little bit more detail. But essentially, we're looking at my list. One of the things I looked at when I looked through it is it talks about the end of EU transition. Well, we've kind of left the EU now, so I'm feeling that there are some residual expenses and things from it, but it's sort of merged in with COVID as well, so it's kind of it's little difficult to tell, but it doesn't seem to have been updated on this risk register, that particular piece. The other thing is I noticed that a lot of the things refer to Chris Trail, who admittedly only left on Thursday. I'm worried about number 4 and number 10. To me, seem to be the same things. Number 4 talks about the local plan, which I'm concerned that it's not progressing, and I have no idea what's happening to it now. Chris Trail has gone, but it would be good if somebody could update us on what the delay is. And I know that from my own personal perspective, I'm the chair of Wokingham Town Council Planning and Transport Committee, we are being inundated with applications, mostly from outside of the strategic development locations. So it kind of, it's very important that we get some insight into what is going on with the local plan. But you talk about the housing numbers. Well, 10 and 4 to me seem to be they should be merged together on that sort of thing. A lot of it I'm looking for is sort of number 20, COVID recovery plan. Do we have a COVID recovery plan for our local businesses? For the council, have we identified the key suppliers, and do we have multiple suppliers and redundancy built in? And a lot of it is kind of about redundancy. 21, which is the elections. Yes, I agree they should be on the risk register for right now, because but obviously they will disappear come about mid-May sometime, I guess.
Can I ask you, do you have a specific question? I think we've had a lot of facts and a lot of comments. Is there a specific question? Okay, right.
There was a lot of questions in there. Do you need me to break it down a bit? It really is questions about why 4 and 19 are not the same merged together. It is sort of 20. What about a COVID recovery plan? What's going on? And yeah, I've got funding for SEND children. We just don't know what's going on with that. Housing numbers is number 19. But yes, and 21 I agree with. I should
okay.
alone with that.
We'll ask Andrew to deal with those as best he can.
Sorry, Andrew.
Okay, no, thanks for that. I think the general point that I would make is, and I think I already said it in my introduction, but just to repeat it, is in the most mature organisations, you'll see risks coming off the corporate risk register. And you started off, Imogen, by talking about the EU transition risk. Now, the only reason that, or the most significant reason that it felt appropriate to have it on the corporate risk register was this specific issue that we were concerned about around the data adequacy risk that's in the report. But as I say, the latest position has given us more reassurance, and I suspect that EU transition risk will be able to come off the corporate risk register quite shortly now that we've had those particular reassurances. And I think that there's some of the.
I will question that, but okay.
Yes, I think, I mean, a point I'd make as well is that just because something may come off the corporate risk register, that doesn't mean to say that management wouldn't pay any attention to the issue in the future. We've got a whole series of directorate risk registers that take the risks that are considered to be appropriate to be managed at a directorate level, but it's those most significant sort of council-wide key strategic risks that find their way onto the corporate risk register. And I think it's a fair observation, it's a fair criticism to say that the risk register has tended to have grown in numbers over the last year or two, and that's an indication that we need to up our game in terms of managing all the risks that we've got on that risk register, so that we can remove some because we've mitigated them adequately, or the risk is no longer felt appropriate to be treated at that level. Elections, as you say, is going to be another good example there, that it's for a point in time. Yeah.
Rachel.
The thing I've got a question about is the housing numbers. You've got the local plan and the housing as two separate things. I kind of view them as, why are they not the same point?
Yeah, and I think take that's probably a fair point as well, that we need to look at. Have we got any overlap at all in this register? We can certainly take that away as a specific action around consolidating across 4 and 19.
And you'll replace Chris Trail, obviously.
Yeah, I mean, again, in terms of sort of the helicopter view, I'd suggest that if we've got an organisation that is sort of dependent on single individuals, then we've probably not got a particularly sustainable or resilient organisation. But you know, that I think would be a legitimate thing for the audit committee to consider in terms of have we got any single points of failure? Are those issues that should be reflected in a corporate risk register? We've obviously got the workforce risk there, which I'd suggest sort of is where that sort of issue might be captured if it is felt to be a concern. It's not something that's been flagged to me.
Well, and sort of thing is, in terms of the IT stuff, for instance, it is. I mean, IT is the business I'm in, but it's to me, what are the IT people doing to break any single points of failure? You know, so that obviously some of the services are still in Waterford House. You know, and it'd be good to know at least a general gist of where these things are going. I'll shut up now. Somebody else's turn.
Thank you. Okay, I think Rachel wishes to come back.
Thank you, Chair. Yeah, just on the local plan, actually. I mean, looking at the wording of that one, I think that needs to be completely revised, doesn't it? Because, you know, still got a control listed there as the executive approved consultation on the draft local plan of January 2020, which is now completely out of date, all things considered. So I'm not quite sure why that's still listed as a control. I don't know if Andrew's got any updates on that particular risk, or whether it is able to confirm that that will be updated in due course.
It certainly needs updating. I'd certainly take that point away. I guess I'd ask the question to the committee. Obviously tonight you've not got one of the directors to talk about their specific risks or the risks on the risk register that are more specific to their areas. I think that's something that has worked well in the past, but I think perhaps there's also maybe an issue in terms of sort of how you get briefings outside of your consideration of the corporate risk register around any sort of specific areas like the local plan as an example, because obviously that's come up this evening from a number of members, and I think again it's about sort of trying to avoid the deep dive into individual risks when you're thinking about the corporate risk register, but equally recognising the interest that you'll have as members in particular issues that appear on the corporate risk register, because if it's doing its job, it is going to be addressing the most significant things that the council is involved with.
Yeah, I mean, thank you. And I appreciate, you know, we can't do the deep dive every time. I think for that one in particular, it did strike me that, you know, I don't get much assurance from that risk is being covered. My other quick point was on the corporate governance risk. We talked about the audit committee self-assessment, so perhaps we could add that into the actions for that risk.
Yeah, absolutely, and I think that's a really good sort of spot to sort of bring that into the corporate risk register. And indeed, if there are other issues of a governance concern, you know, that's where we should be capturing those mitigating actions against that particular risk.
Thank you.
Thank you. Justine, you have your hand raised.
Hello, good evening, everyone. I just wanted to just make a quick point following on from Maria's view, where she didn't quite understand what you could do differently. And what we've tried to do is explain it in the audit report, and we're happy to join any training session and talk about this in more detail. However, when we're talking about the helicopter view, what we're talking about is linking the risk register back to the authority's corporate council plan and 21st century delivery plan. So you've got your strategic objectives in there. And so what the corporate risk register could and should do is actually underpin that and look and document the risks around the achievements of the authority's strategic objectives. And that will give it a link to the corporate plan. At the moment, it's kind of standalone. So what we said in our report is that risk management, in order for the council to fully demonstrate and embed enterprise risk management, what it needs is to integrate performance management with risk management. So risk management is kind of the opposite of good performance. You know, I mean, I know positive risk management can give you an opportunity, but it also can highlight poor performance. So the two go hand in hand. They shouldn't be seen in isolation. And I think Imogen is right. I think there are areas where there are overlaps. And I think the risk register as it stands at the moment is part risk register, but also part mapping your assurance framework. It has a lot of good assurances in there. And I think that, you know, it could be developed as two different documents and have two different purposes. But I'm happy to discuss that in more detail with Andrew and anybody else at a different time.
Thank you very much. Thank you. Okay, I got no hands up, but I think perhaps Maria wanted to come back. Am I right?
No, I'm fine, thank you.
No, you're okay, are you? Thank you very much. Okay, well, that I don't think there's any further questions, so that one seems to have run its course now. So on 49, we just have to receive the report, so that's fine. There's no votes on anything there. So we come on to item 50, which is the update on the internal audit and investigations, including Q1 plan for 2021 and 22. Over to you, Catherine.
Thank you, Chair, and good evening, everybody.
Good evening.
I'm presenting agenda item 30, which is page 233 to 246 of the report. There are actually three elements to the report. The first part is the update on internal audit and investigation work for the current financial year to the end of December 2020. Now, the last detailed report on the work of audit and investigation was provided to this meeting on the 23rd of November, showing progress against the audit and investigation plan. And since that report, there have been no new audits that have resulted in a less than level 2 audit opinion, and that is where internal controls are substantially complete and effective. So there are no specific areas of significance to be brought to the attention of the audit committee at this time. For the remainder of this financial year, the team's focused on completing the remaining audits in order to feed into the Head of Internal Audit opinion on the Council's governance, internal control and risk management arrangements. The second and third parts of this report relate to the 21-22 internal audit and investigation strategy and the 21-22 Q1 audit and investigation work programme. As explained in the covering report, this year's been a period of uncertainty as councils have responded to the COVID pandemic and also their changing risk profiles. This has there's also been a significant impact on the ways officers have worked, with more home working, reliance on IT, and changes to systems and processes as we've responded to changes due to the pandemic. In addition, there's been the extent to which we've been able to deliver planned audit activities because of the availability of auditees who've needed to respond to the effects of the pandemic within their services. Usually we prepare an annual audit plan, which would come to the audit committee in February for the forthcoming financial year. However, in discussions and with the agreement of the Director of Resources and Assets, Section 151 officer, and members of CLT, it was determined that a one-year plan would not be practical at this time. In the coming year, we need to be able to be flexible, forward-thinking and responsive to future uncertainties and sudden events. So we're proposing that we will move to quarterly planning cycles rather than an annual one in the 21-22 financial year. And that's reflected in the two documents that are presented to you. So the document at Appendix A is the internal audit strategy. This is the overarching document for internal audit work. It sets out the role of audit, its scope and responsibilities, the audit planning process for 21-22, and within the document we've reflected the move to the quarterly planning process. We already report back to this audit committee on a quarterly basis, so you'll in terms of the planning process going forward, you'll receive a quarterly plan and you'll have early sight of the areas that we're intending to cover. We also mention in the strategy about the reporting to CLT and the audit committee. And as I mentioned, we already report on the work that we've undertaken in the quarter, but we'll be actually specifying audits to be undertaken in the coming quarter that will contribute to the head of internal audit opinion. The document also mentions the internal audit requirements to conform with the public sector internal audit standards. These are our service and professional standards for internal audit. Appendix A1 is the quarterly plan of work that we're proposing for Q1. This is on pages 245 to 246. In preparing the plan, we've used a similar process as we would to prepare an annual audit plan. We take into account the council's risk profile. We've aligned with the corporate risk register and the annual governance statement. And you'll see that for Q1, we've got 4 specific audits from the corporate risk register. And those are corporate governance, the SEND reform, adult services and safeguarding, and provider market key strategic risk, and climate emergency. And I've noted the comments from Councillor Burgess in relation to this area. And I'll just mention as well that part of the audit work that we undertake is to assess whether the controls that are in the risk register actually do address those risks and that they are effective. So that is something that we pick up through that auditing process. In preparing the audit plan, we also take account of knowledge that we have on the impact of the pandemic on our organisations and the systems and processes that have been affected by COVID, and also external guidance from our peers. So as I mentioned, this plan has been prepared in consultation with the Director of Resources and Assets and members of CLT, and we're asking for the Audit Committee to note the contents of the reports and approve the 21-22 internal audit strategy and 21-22 draft internal audit and investigation Q1 work programme. And I'm happy to answer any questions you may have.
Thank you very much, Catherine. Yeah, we'll go to Daniel first, please.
Thank you, Chairman. I'm referencing the Appendix A, which is setting out the work your team is planning to do during the first quarter. And I don't know whether this is, it was just me, but it strikes me that this is quite an ambitious plan of work for just a quarter. Is that a fair thing for me to say, or is it roughly a quarter of the work that you normally expect to do in a year? I'm trying to recall what the previous year's full list of work looked like, and whether this kind of appears to be roughly a quarter of it, or whether you're taking on significantly more work, or whether maybe you're approaching things in a slightly different way, which means you can cover more topics.
Well, we prepared this plan. It was at the time based on the audit resources that we had available. Obviously, we need to keep a watching brief on that position because with the COVID pandemic and the responses to it, we have had some redeployments out of the team as well. So if there are any significant changes to the plan, as we'll be coming back to on a quarterly basis, we'll be reporting, if there are any resourcing issues in terms of achieving what we're proposing to do.
Okay, Daniel. Yeah.
Okay, thank you.
Thank you very much. Okay, Rachel Burgess.
Thank you. Thank you for your introduction, Catherine. I just wanted to expand on the climate audit, which you also mentioned. So I think to be effective, this audit's got to address the level of carbon savings that are planned to be achieved by the Climate Emergency Action Plan. It can't, in my view, it can't just be an audit of what actions have been taken, but it has to be on the extent to which those actions will reduce carbon or will in the future to the extent needed. So the risk that we're looking at here, we're talking about linking to the risk register, is that we don't meet our objective to become carbon neutral as a borough by 2030. So any audit that that doesn't specifically audit literally the carbon savings proposed by the plan, I don't think it would be worth doing in my view. So I guess my question is, are you able to confirm that this audit will specifically audit the accuracy and the achievability of the carbon savings listed in the Climate Emergency Action Plan?
I think this is something that will come into when we actually do the scoping of this piece of work, which obviously we'll need to agree with CLT as well. but I can take it on board, the comments that you've made this evening as part of that scoping exercise.
Yeah, I mean, actually, if you're not able to confirm, and I'd like to sort of make it a formal proposal. I'm not sure if I could do that, but I would like to make a formal proposal, if anyone would second it, that this would be sort of an accounting style carbon audit, or at least include that of the action plan targets and the methodology and the underlying assumptions.
Chairman, could I just add to that before you get some wider feedback from the committee on Rachel's proposal? What I would say, just to add to Catherine's point, is we still need to do the detailed scoping, but one of the things that Catherine and I have been talking about here is what external expertise we might need to bring in to help the internal audit team to complete this work. So it'd be interesting to hear the committee's views on that particular point.
Okay. Losing you. Thank you, Andrew. Rachel, you made a proposal. Do you have a seconder for that?
Do I have a seconder?
Yeah.
I'm happy to second that.
You are?
I think it's so critical that that looking at just, you have to look at the whole methodology and everything. So I'm happy to second Rachel's proposal.
Okay, so do we have a consensus of opinion that we go with Rachel's proposal? Can we have a show of hands for that, please? 1, 2, 3. Hold on, I'm trying to count. I'm trying to see everybody's hands. We have
Sorry, could you repeat the proposal for us, Bill? Would you mind?
Yeah, could you repeat the proposal again?
Yeah, so the proposal was that the internal audit includes an accounting style carbon audit of the action plan targets, the methodology and the underlying assumptions in the climate emergency action plan.
I should add to what Rachel says, there are standard methods for doing this. I don't know whether we've got the expertise, but hopefully we can get that in.
Okay. Right, okay, so at the moment we have 3 for that proposal. 4. Any others? Anybody against? And sorry, Imogen, you're voting twice. Okay. Nobody against. Any abstentions?
Just was trying to get my hand bound. Time.
Okay. Any abstentions? Hold on. Losing myself here. I will abstain as well. I can't get my hand up. So, okay. Yeah, well, that's carried. That's carried. So that proposal has gone forward. Okay. Hello, I'm losing. Can you hear me?
We can hear you.
Oh, you can. Right. Okay. Yeah, that proposal was carried. So, right. Are there any other issues? Any other points anybody wishes to raise? No. Okay. Well, thank you very much for that, Catherine. We'll go. There are 3 items that we have to consider on this. The first one is to note the 2020 internal audit investigation, which is a case of just noting. The second is to approve the internal audit investigation strategy for 2021-22, which I think we need to take a vote on as well. So to approve it. So could I have a show of hands for those who are happy to approve that, please? Wait a minute, let's come down. For some reason, when I do this, I lose my own ability to raise my own hand. So let me just go back. Are you, Madeline, are you able to count these?
Yes, I can see 4 hands at the moment.
Yeah, can you include mine as well, please? Oh yeah, mine's, yeah, include mine.
Now.
Yeah.
Including yourself at 6.
Yeah, that's it. Thank you very much. So I think that's the total number, isn't it? I don't think anybody against. Just in case. Imogen, no, and no abstentions. Okay, so that's Approved. And item 3, to approve the quarter one plan for 2021-22. All those in favour, please raise your hand. Again, mine is raised, Madeline.
That's 6 again. Yeah.
Okay, well, that's fine. That's everybody again. So I don't think anybody against or any abstentions. So thank you very much for that. Thank you very much, Catherine.
Thank you.
Okay, I think that brings us to the end of the meeting, unless there's any other items anybody wishes to raise. But other than that, we will have our meeting on the 22nd. That's to finalise the audit results report. So that, I think, Madeline will email out and let us know a time and confirm the date. But other than that, if there's nothing else, can I thank you very much for attending the meeting and have a good evening.
Yeah.
Thank you.
Thank you.
Thank
Bye.
you.
Good evening all. Bye.
Cool.
Thank you. Good evening.
Right.